Have you ever wondered just how much money you can tap into with a HELOC, a home equity line of credit? If you're considering this option for remodeling, consolidating debt, or even buying a second property, that figure matters. But unlike a personal loan with a simple limit, how much you can borrow with a HELOC depends on several factors: your home's value, how much you still owe, your crediting income, and the specific rules your lender uses. Today, we're answering that question directly in a format that makes sense. Real questions with real answers, so whether you're ready to apply or just planning ahead, you'll know what borrowers like you can expect. So question 1, what determines the maximum HELOC amount you can borrow? Well, your maximum HELOC borrowing limit isn't a fixed number like $50,000 or $100,000. Instead, lenders calculate it based on your home's current value, what you still owe on your mortgage, and what percentage of your home's value they're willing to let you borrow against. Lenders normally measure this using a ratio called combined loan to value, or CLTV, which includes your existing mortgage balance plus the HELOC amount you're seeking compared to your home's appraised value. Now, most lenders cap this combined total at about 80 to 85% of your home's value, meaning the total of your mortgage balance and HELOC cannot exceed that percentage of the appraised value. That doesn't mean your HELOC alone is 80% of your home value. It means your existing mortgage balance plus HELOC are limited to that threshold. So if your home is worth $500,000 and your lender allows up to 85% CLTV, your total borrowing power is $425,000. And if your mortgage balance is $350,000, that leaves about $75,000 available for a HELOC. So question 2, can you get a HELOC up to 90% or even 100% of your home's value? In most cases, the answer is no, at least not with typical lenders. Most lenders cap borrowing at around 80 to 85% of your home's appraised value when combined with your mortgage balance. Now, some lenders, often credit unions or niche lenders with specialized programs, may be willing to go higher, sometimes up to 90%, and there are rare programs that allow borrowers to close at about 100% of the home's value. But higher maximum limits usually come with trade-offs: higher interest rates, stricter credit requirements, and greater risk. Because lenders are taking on more exposure, they most always require stronger qualifying factors for high LTV HELOCs. Question 3, what else affects your maximum HELOC amount? Even if your home has plenty of equity, your maximum HELOC amount isn't solely determined by your home's value. Lenders look at several financial factors when setting your line of credit. Credit score. Higher scores generally allow lenders to be more generous with your credit line and offer better pricing. Lower scores often reduce your limit or increase your interest rate. Then there's debt to income ratio. Lenders assess whether you can afford additional debt payments before increasing your HELOC limit. Higher monthly debts relative to your income can cap how much you qualify for. Then there's appraised value. HELOC limits are calculated based on your home's current appraised value, not what you paid for it. A higher appraisal increases your borrowing power. A lower one reduces it. Question 4. How do you actually calculate your maximum HELOC? Well, to estimate your maximum HELOC amount, start by calculating your home's current appraised value. Then identify how much you still owe on your mortgage. Multiply your home's value by your lender's maximum CLTV percentage, for example, 85%, to find your maximum total borrowing capacity. Subtract your existing mortgage balance from that figure to estimate how much HELOC credit you might qualify for. Using our earlier example, a home value of $500,000, a CLTV limit of 85%, so maximum borrowing equals about $425,000. Current mortgage balance is $350,000. The maximum HELOC amount is $75,000. Now, keep in mind that every lender's CLTV limit may differ slightly. Some stick with 80%, others go to 85%, and a few higher risk programs might allow even more. Question 5. How does this play out in real life? Okay, example 1. Imagine Hannah and Marcus's home is valued at $600,000 and they still owe $360,000 on their mortgage. Their lender allows up to 85% CLTV on HELOCs. That means the total combined loan limit is $510,000, 85% of $600,000. Subtracting their existing mortgage balance of $360,000 leaves them a HELOC potential of about $150,000. Now, in this case, they have substantial borrowing capacity because they've built up equity through both paying down their mortgage and benefiting from rising home values. They use their HELOC to fund a major kitchen renovation without refinancing their primary mortgage. Now, example 2. Now consider Taylor, whose home appraised at $450,000, but who still owes $420,000 on the mortgage. In this scenario, the combined mortgage balance is already very close to the typical maximum CLTV limit lenders allow. So even though there's technically some equity, the opportunity to take out a HELOC may be very small or non-existent, depending on the lender's risk tolerance. In cases like this, homeowners often need to pay down more of the mortgage, wait for home values to rise, or explore alternative financing options before a HELOC becomes practical. Question 6. Can your HELOC limit change after you get one? Yes, your HELOC limit isn't necessarily fixed forever. If your home's market value increases significantly, you may be able to request a credit limit increase, which typically involves a new appraisal and financial review by the lender. Likewise, if your home value declines or your credit profile weakens, some lenders can reduce or freeze your available credit line. So in closing, if you're wondering what's the most I can borrow with a HELOC, remember, it depends on your home equity, your mortgage balance, and the lender's rules. Most homeowners can access up to about 80 to 85% of their home's value combined with their mortgage, with higher limits in select cases, but always with trade-offs in terms of requirements and costs. If you found this video helpful, make sure to check out the full article on our website linked below. And be sure to give this video a like, subscribe for more home financing insights, and drop any questions in the comments below. Thanks for watching.